welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Blue Snow, can you hear? Hello. Are we? I think we are live. Getting back. Yeah, that's better. Gog says yes. All right, cool. All right. Well, there's a start for the video, eh? I suppose this is a good sales pitch for why we really shouldn't do these things live. Oh well. Had to go into the Zoom call and manually change the microphone I'm using. So the system says I'm using the blue, I think it's this funny looking microphone thing. I had to manually go and change it. So I don't know whether this is going to work or not, but we'll give it our college try. It is, of course, Sunday. This is our Broiler Chicken Show. Hey, Chris, do you keep me sort of off the side there? I noticed that my picture there over on YouTube is not quite on the side. Anyway, is that normal? Is that how we normally do this? Thought I'd be down in the corner there. But anyway, could be. Yeah, I was saying with this silly blue screen thing or green screen thing, though, that anyway, yeah, there you go. If you could move me over a little bit to the, I guess, let's see, which direction is that? There you go. Oh, there you go. That's a little better. Holy amateur hour, eh? No wonder I have no viewers. Sad thing is I think the information that we impart onto the public is valuable, but all this show production stuff, people always gauge you, of course, on how pretty you look in this world, not really the content that actually is coming out of your mouth, which is kind of a shame. As soon as Alan got plugs, all of a sudden everybody fell in love with him. Anyway, not quite sure why that came to mind. Anyway. All right, so we got about an hour. I actually got a better part of 2 hours, so that's not bad. to sort of convey our weekly message. I think on balance, the message has been fairly consistent. Do we have a polished newsletter that we can show these people, Chris, or do you still need a little bit of time on that? It is. All right. On Discord? Yeah, don't. Oh, member lounge. Okay, so we got to go over to the direct messages. Okay, that must be this link. Let's see what happens when we pull this up. Naked ladies, what the hell? Oh, there we go. All right, so we do have this nice little newsletter. And Chris is a total boss at this. So Chris is directly responsible for producing this. And I think he does a fantastic job. For site members, you can access this newsletter in the newsletter tab under TRI publications. You can see this will probably turn into like a mile long. Maybe we might even do like subsection like 2023, 2024, who knows, something like that. But you can find it when I get back from Liam. I'll post this in the library. And I got to tell you, this library itself is worth the basic site subscription. There's so much good information in here. And you could, in fact, we just started a new level 1 education program, actually a new education program term for the entire education program. And my suggestion, especially for the level 1ers, especially the guys who are like super gung-ho, is you go into the library, especially under these videos, because you can just sit and watch and take notes and literally just get to work. A couple of interesting documentaries on stock markets, as well as some great videos on how sort of nature works and how the economy works and the money masters, of course, everybody. In fact, this should probably be required watching for everybody and anybody who actually fancies themselves a market participant and a market prognosticator. And do you actually want to try and outperform versus just burying your head in the sand and like buying like I don't know, a mutual fund or an index fund or something like that, and just being a passive investor. The only problem with this, of course, is once you actually understand what's going on, then you realize how much of a fraud our society is and it's literally criminal how bad is. Just kind of a shame. It's, half the reason why Bitcoin got started. But I'd also argue too that I do think that Bitcoin was built for intentionally because they knew one of these great resets was about to happen, which means that the public gets basically put back into poverty and their life gets destroyed. Thank you very much, 1%. They start the whole fraud all over again. So, I'm not going to sit here for the next hour or two ranting about how bad the situation is. If you want to get a very real education on how money really works, watch that Money Masters videos. And actually, he even did a couple other sort of follow-up. There's a really cool video follow-up that he did, the Yellow Brick Road, and how the Yellow Brick Road was, and the whole story of Dorothy and the Wizard of Oz was actually an anecdote of the fraud of the money masters in our society. In the latter part of the 19th century, beginning part of the 20th century, when really that's when all this stuff began. So, point I'm trying to make here, I suppose, point I'm trying to make here is if you are relatively new to the website, new to our education program, you got yourself a little bit of extra time, fire yourself into the library and get watching and get reading. And of course, we've got all the really cool sort of users manuals for the market, for lack of a better term. In fact, actually, my favorite and most, all you aspiring technical analysts, this is by far the best document I've ever had to learn technical analysis correctly. It was actually produced by the Commodity Research Bureau. They're not even around anymore. And this used to actually be given out by brokerage houses. And you can see compliments of Price Futures Group. Who the hell are they? They're long gone a million years ago. We used to give this out to customers who were at the various different brokerage houses I worked at over the years. And you can even see, look at this, the last date on this is 2011. So that just goes to show that's like what, 12 years ago. And this document was originally produced a million years ago. And actually, what's super cool about this document, I often tell people, like, I've been at this game so long, I used to get my price charts in the mail. And this is actually what the price charts used to look like. This is exactly it. And they used to literally be like made out of tissue paper. And drawing on these things and trying not to puncture them and stuff is next to impossible. But sadly, these brokerage houses, they come and go. But this information, this one document, is just absolute gold. And like I said, we used to just give it out for free as a marketing material. And a lot of our concepts in our education program are actually derived from this document. It's such a fantastic resource. You really want to, for all those people that fancy themselves like, hey, I'm an expert on relative strength index. I actually use this document to, a million years ago, I used to have a website called rationalinvestor.ca. And I actually manually wrote all the indicators and stuff and calculated everything, pulled down all the end of day stock data and stuff like that. And I had to go through this. This actually teaches you how to actually calculate a relative strength index. And I'd say 99 people out of 100 who actually use RSI, they haven't got a clue how you actually calculate RSI. That's how incredibly powerful this document is. And then also too, the whole concept of divergence and stuff like that, which of course we teach in our education program. You want to learn how to do stochastic, how to calculate a stochastic oscillator, same sort of thing. So anyway, the point being that this library is just so awesome. It's just chock filled. It's just tons and tons of information. Anyway, let's see, where should we go here today? I was each week Chris and I get together before we do this video and try to put together. I like this idea of putting together a nice sort of one-page sort of summary of what we see happening in the markets, some of TRI's proprietary trading tools, and then every week I actually like to go in and do a nice summary of the Bitcoin market here. Weekly chart, daily chart, 4-hour chart. I think it gives an excellent sort of starting point for you to be considering what to expect in the coming week. And it's free. I mean, this is Twitter. So I don't know how long I'm going to stay on Twitter. Of course, Alan and his stupidity. He's completely butchering this thing. And who knows? My hunch is he doesn't even want Twitter to look like Twitter and function the way that it did in years gone by. He's more interested in the hundreds of millions of users all registered and stuff. I think that was the one thing that sort of failed when he tried to do the PayPal thing, is he just couldn't get a big enough user base to really affect the financial system. So if he ties in something like Doge, which already has sort of the metric of a fungible asset. I don't know whether you could even use the word fungible, but an asset to like move money around with the massive user base of Twitter. I could see how he could achieve basically creating his own financial network. And all this social media and stuff like this is all just secondary and it's just nonsense. And that's my interpretation of what his motivations are here. I don't think the social media part of it, I don't think he gives a rat's ass about any of that. Anyway, it was interesting too, though. I did watch an interesting documentary. I think it was yesterday on just how bad the like yeah the is a kind of a fun documentary I watched. This guy always puts a smile on his face. He has such an interesting unique bent on the world. Let's see if I can find this for you. I like listening to this guy. Very, very different character. Let's see, where's his story? Let's see if I can find him for you. This gentleman, Eric Weinstein, he's a character.
For a very long time.
And I suppose appropriate shout outs to this gentleman, Chris Williamson. Anyway, he had him on the broadcast. And, he made an interesting connection with Epstein and the CIA. And how he actually thinks that Epstein was just like a construct. And he made an interesting parallel. The Jews over in Israel, they got caught doing basically the same thing with a guy. I think it was back in the 1970s. Not going to get into the details. Go and watch this video. It was a fascinating conversation. This guy's just over the top intelligent, and he kind of thinks that Epstein was basically he was constructed. He was put in place to serve a very specific purpose by the sort of Secret Service, the intelligentsia of our society, as sort of like a blackmailing operation. I think it worked actually very well, although evil as hell, but nonetheless very effective. And Alan basically revealed that the Secret Service and all those sort of what do they call it, deep state and all that crap, right? They were fully immersed in the Twitterverse and doing their thing there. So anyway, sort of tangent. Having said that, I'm going to use this Twitter feed and this sort of format as until I find a different venue, and then I'll probably just move over to that. And in a weird sort of way, I don't use social media the way you're supposed to use it. What I really want is I just want like a place where I can just dump my ideas. And then of course, if I find, crazy stuff that you see in society, substitute drama teachers being completely hypocritical and like literally saying one thing one year, and then a great part about social media is they you track this stuff, and then you see a year or so later typical politician completely lies and completely counters what they said in the past just to win votes, right? And that's what I love about these social media things, is you can actually like keep track of this stuff. And in fact, that's actually the number one reason why Mr. Weinstein here says that Epstein and all that crap failed, was because Epstein and all that crap and that silly island that he had where he blackmailed people with sexual shit, that was a product, that was a function of the 20th century. And Mr. Weinstein made the argument that in this internet world, something like an Epstein Paradise Island kind of stuff, it just isn't going to work. The word will get out. And in essence, half the reason why Epstein imploded was because that world just totally contradicts the internet freedom of information world that we live in now. So that was, like I said, that was a really good interview. I really enjoyed that. So shout out to who was that gentleman? Give him another shout out, Chris Williamson. I really enjoyed listening to his podcast. Of course, he's got a half decent number of subscribers. Not like Brian. I don't think anybody actually listens to me, but what the hell? All of you that do, I hope you get some value out of all this. All right, so moving back to our story here. Our proprietary timing signal, the breadth indicators, giving mixed messages again, which is a bit dangerous. I noticed, and we have one longtime site member who said that if I ever see that the crypto is bullish, but the S&P 500 is bearish, I'm just going to take that signal very slowly. And we did get a buy signal on the crypto breadth here recently. as I've kind of pointed out in the weekly summary document here, I think that we're in a trading range. And oscillators, something like the breadth indicator, is a really good example of an oscillator. They get chopped up quite a bit in ranging markets. They love trending markets. Give me a signal, then the market just takes off and just continues away in one direction, and you make tons of money taking the signal. In ranging markets, oscillators often have a bit of a challenge, and I think that's basically what's going on here. As my sort of higher time frame analysis here, this is a pretty typical. This is very business as usual. Buy when it snows. And actually, it was interesting. After I posted this chart, I noticed I didn't have the buy when it snows, sell when it goes the icon on here. It actually is on the chart. I just zoomed in too close. The point being, I suppose, is I don't really see anything out of the ordinary here. Here we are, buy when it snows, sell when it goes. The good part about it, I suppose, is we are coming back into a buy when it snows scenario. So that's kind of good. If anything, this is, you're all supposed to have your journals out here. And if you happen to see Brian drop some sort of nugget of wisdom or something that you've never heard before, be sure to write that down. If anything, what I would suggest you all do is, if you do have your journals out, just take a screenshot of this and throw it in your journal. Now, what does the weekly price chart look like? I mean, are there any sort of basic ideas that we can take away from this price chart? As you can see, this was the bottom last November, December. The number one thing that I've seen over the past, 10, 15 years following Bitcoin in particular, is that if we bottom, if we're tanking into the end of the year, that usually bodes very well for the coming seasonal rally window. However, if we are rallying into the end of the year, and I suppose, this isn't really the best example. That's kind of like middle of the road, eh? We're rallying, but we're not. But here's a good example. Rallying into the end of the year. And by the time we actually get to June of the following year, you can see it's almost like a hurry up and do nothing. And I guess in previous years, we've had some really good examples. This is what I think that we're doing right now. And actually, I put this tweet out recently, just overlaying the 15-16 bottom, and then the subsequent. Keep in mind that the halvening event, of course, is right. This one was right here. I got a funny feeling. It's September. Oh, interesting. I got a funny feeling that this is what our future is going to look like here through this year. In a weird sort of way, here would be the end of the year right there. Not really at the bottom end of the range, not really at the top end of the range. And, you can see, well, we had a nice little sort of start to the year into that January. Then we had our health crisis. I don't know whether they're going to remanufacture another crisis. I do understand that Mr. Trump's trial is scheduled to start in March of this coming year. So I wouldn't be surprised if a lot of attention is focused on that. And obviously, the outcome of that trial is going to have huge implications for the elections that are supposed to, of course, happen at the end of the year, which I guess would be in here. And the interesting thing, I don't know whether it shows in Bitcoin or not, but I remember distinctly in the stock market, the day that Mr. Trump was elected, the market just went absolutely insane. Elections, October, November, right in here, right? You don't really see it too much in Bitcoin price, but you do see a pretty substantial rally there. I think that was around his election event. And of course, he takes office the first week of January. But the whole damn market, everything just lifted. So, maybe this is what our coming year has to look like, right? Because this was also a happening event window. One reason why I don't think the market's going to look like this is if we do a historical comparison, you see that, we just draw this on here. Where are we here? Well, I'll do an arrow. So July, August, there's September right there, right? So this is where we are right now. And we really haven't had that wipeout move. The sad thing is that I've found, again, 10 years following this damn thing, usually Bitcoin can't end an up or down move without some absolutely horrendous FU event. I mean, keep in mind, just this 2 weeks here, that was 255, and they traded down to a low of 198 on this candle. So that's a loss of like $60 on a $300 asset, or basically losing like what, 25% of the value of the asset in 2 weeks. So I wonder whether we need to see something like that. And of course, the sickness market, same sort of thing. And we were coming against key lows and reload zones and all this, and in like 2 weeks, right, we went from 8,500, hit a low of 5,300. That's a loss of $3,000, or basically what, about 30-40% in 2 weeks. And that ultimately marked the bottom. So I wonder whether, if anything, what I see here is I see we backed up into what would technically be a very appropriate level. In fact, on the daily charts, and I even pointed that out on this tweet, I think this was it. We had a lot of reasons to look for the market to pivot right around this low. If we look at this, Twitter always seems to just sort of stall out here as I do these things. Yeah, look at that, did it again. There's no reason. Why is this doing this? It's like somebody doesn't want me showing this. It's not, I guess this must be like a functionality issue with Twitter. I notice this happens almost every single week that I do these videos. Something along these lines happens. See if we can just reload it. All right, so there we're back. So the medium time frame, I guess maybe we'll jump from, oh, now you decide to work. Yeah, way to go. So higher time frame, and we'll just have the medium time frame on here so we don't have to flip back and forth. We had 5 different very realistic reasons to look for Bitcoin to bottom in this area. This is actually an alt AB equals CD level, this 1.618, which I've found, and I've told you guys this before, and write this down. If you do get one of these AB equals CDs, and it does go all the way to 1.618, didn't you remember I used to say 9,999 times out of 10,000, you will see the market reverse off of that 1.618. Can somebody on YouTube just affirm that they heard me say that before? Chris, could you remember when I said that before? Because yet again, we just had another perfect example of this.
Yep, I remember.
Cool. I don't know whether the YouTube people, they seem to be bump the ideas, BB, let's fool. All right, Nori says, I remember. Yes, many times, DMAX says. So, I mean, the point here, hopefully you guys, you hear the same message day in, day out, week in, week out, month in, month out, year in, year out. Not a big surprise. And if you're relatively new to this, for God's sakes, take a screenshot of this and even just put in your notes. When that Beamish guy says if the alt AB equals CD goes all the way down to 1.618, you can pretty much set your watch to the fact that this goddamn thing's going to reverse violently off of that level. You'd almost think that maybe that's even a reason to consider justifying taking a trade. All right, Brian's getting all excited again. Calm down. So not a huge surprise. Also, too, you hear me barking constantly. Candle body lows for trade location. And then also too, I remember when this happened, went on vacation for a couple weeks after that. When my birthday, right? Just remember this: if you ever see it's Brian's birthday, run for the fucking hills. Usually near the end of June, beginning of July, there's a pivot in the market, and what a surprise! It turns out the bastard Fink came in here I would actually think about a week early, and he just put a bottom in the market with, I want an ETF, I want an ETF, give me an ETF, give me an ETF. And the market just launched higher. Uh, was this because the seasonal sell-off window had exhausted itself? And there's just, the market can only go down for so long. Was this because he and his cronies knew that there was a bunch of people that were short? And all of these highs, of course, would represent liquidity pools that people would have their stops against. And if we just pump price up, maybe we can flush out a whole bunch of weak shorts. Is this, a technically justifiable level for the market to pivot off of? I didn't really like the technical level here. And then also too, as I said there a moment ago, V bottoms notoriously need to be tested. So when I did see this pivot come in, I mean, it doesn't surprise me that they did this. But at the same time too, when I saw that, I was like, there's no way this is a bottom. And sure enough, basically the entire summer sort of market, when all the crypto kids are most enthusiastic, most bullish, they literally robbed the crypto kids of their rally with this move up here. Like, what should have probably happened if this was a normal, healthy bull is we slowly put in nice bullish divergence, then put in a nice W, then just start climbing the wall of worry, making higher highs and higher lows, W's on other sides of down trend lines, etc. And it's just a nice, healthy bull. But no, this was literally straight down, straight up. They literally take the entire seasonal rally in, like, this is a daily chart. So in literally inside bar, okay, boom, buy signal fires on this inside bar. If you have the balls, you pull the trigger there. You have your stop below here, and like literally in 1, 2, 3, 4, 5, 6, 7. You might even argue 7 days, because this peak up here, you can see how price basically that was the peak. So in 7 days, maybe 8, 9, be generous here. The entire summer market rally was taken there in that little window. And then literally for the rest of the summer, all we've done here is just grind our way back down. And what a surprise. Here we are. They just put in another candle body lows or trade location, V bottom. In this particular case, kind of a nasty, almost like railroad tracks bottom here. And this is a V. So as a result, let's see if any of you are listening. If this is a V bottom, what should we absolutely expect to happen at some point down the road? It has to happen. There's no way the bottom is going to look like this V. What has to happen, all you YouTubers? Thank you, Nore. Thank you, Adoshi. You got to learn from this, people. You really do. Yeah. Well, they don't have that much of a tail here, which is kind of interesting, right? So you could even see there were a bunch of trap bears in this little tail right here, right? And they didn't even really give them that much of an opportunity to get released. But it's good observation, DMAC. Good observation. My suggestion to you, I mean, we got 16 people watching, 30, I guess 30, about 35 people watching, 16 likes. If any of you, oh, no, we just lost a couple people. The bots, they're the ones that go, okay, as soon as he notices the number of people watching, we have to leave instantly. Anyway, if you've never seen this before and you're learning, I just gave you a nugget of wisdom there. You should be writing this in your journal. And for Pete's sake, if you've never heard this before, you've never had anybody teach you about this, especially like Alt AB equals CDs, please hit the like button, subscribe, ring our bell, and all that. Actually, it's interesting. Just a moment ago, the likes were at 19, and the likes actually just went down to 16. Oh, that's interesting. And they just went back up to 19. Isn't that interesting? Oh, look at that. And then they went back down to 16. Isn't that interesting? So somebody, oh, now it went up to 20. So somebody's sitting there hitting like, dislike, like, dislike, like, dislike. And thank you, Quinn. Quinn says, hit the like, don't be a ninja watcher. And Dosh, isn't that interesting? There now it just ticked to 22 for me. So Doshi there saying, I see 22. Now it just went up to 22 for me. So anyway. And so Quinn was the evil guy. He was hitting the like, dislike, dislike, like, dislike. And actually there was one guy who used to watch these videos, and he used to hit the dislike button just because he liked to see my reaction when they used to track the dislikes. And I'd be like, who the hell is disliking this? So there are some people that actually get like an internal joy out of watching other people get upset. I'm not quite sure what motivates those people. I think maybe they're a little bit bitter. They're maybe a little bit emotionally disconnected. Maybe they've suffered a lot in their life, and they maybe get pleasure out of revenge and stuff. So I try not to get too wrapped up in all the likes and dislikes and stuff like that. But the long and short of it here is we're trying to get a positive message out to the world. So, and the way these algorithms and work stuff, if anything, let me know in the comments if you could. There's 20 people that like this video. Maybe just post a comment. Your comment about Alt ABCDs and how 9,999 times out of 10,000, which I heard you say a few weeks ago, the market reverses off of 1.618 tags of Alt ABCDs. I never heard that before. Thanks, Brian. I learned something new. Just something like that, man. It would help the channel out immensely. So anyway. So point here is that we had a bunch of reasons to look for a pivot down here. And my comment just simply was the reversal off of 5 reasonable level shouldn't have been a big surprise to anybody. Also 2, which is interesting, if we look at the daily chart here, and one site member, I think he was a school. Yeah, I think he did the entire school program. Super whiz when it comes to programming. The guy's smarter than a whip. He actually built an indicator on TradingView to show all of the divergences. And on the daily chart, as we were coming down into those levels, where are we here? Boom. Look at all the divs that started to pop up once we got into this trade location. So what I like to identify, you all know how the 3-step setup goes, right? So let's see how quickly everybody can jump through a hoop. How many reasons should we have to justify taking a trade? Interesting if the Google algorithm picks up whistling of certain songs and whether that becomes copyright. Anyway, how about you guys here in the lounge? You don't get off easy. Maybe you got to go over on the YouTube page too. Glass Insights, Eddie, Zero Max. Wow, there's a name, Zero Max. I don't think I've met you before. Hello, Zero Max. Keep in mind, we just did start a new education program. So we're probably going to have a whole bunch of new faces around the site. So welcome, welcome. And hopefully you're going to get used to Brian's crazyality. Crazyality, is that a word? I think I just made up a new word. Anyway, 3 reasons. Thank you, everybody. Oh, you're so awesome. Look at that. Samurai even posted the actual news. The specific reasons. And actually, I think you got it slightly backwards there, but that's okay. You will learn. So these 5 reasons, these are all about location. And Quinn says location, location, location. Remember, we want to ideally have 3 reasons to justify taking a trade. And number 1 should always be, it's like real estate. The most important thing is location. So can you see how these 5 different reasons are all location? Chris, do you see that warning from YouTube? Just popped up on my screen. Zero Max. It says, yep, new week 1 newbie. Oops. Chris, can you hear me? All right, cool. And you got Zug there doing his thing as well, on the same internet. Yeah, so maybe ask Zug if he can. Anyway, all right. All right. So Zero Max says, "Yep, new week 1 new." So anyway, location, location, location. This is 5 different reasons, and they're all location. 1.618. Now, hopefully, you all remember this for the rest of your lives. 1.618. God damn it. Did I take it off of this? Oh, there it is. Yeah, 1.618. Holy trade location, Batman. And look at what the market did. Just literally went down, tagged that level, stayed there for like a heartbeat. Hopefully, you all, I mean, God, there's so much cool information here. This is incredible. And I'm just giving this away for free. Please hit the like button. Just tell a friend. It's ridiculous how much free gold there is in this price chart right here. So anyway, these 5 reasons, these are all perfectly realistic reasons. And as I said, if you are one, I've said this before, I didn't say it today, but if you are one of these sort of self-teachers, I'm not going to buy your goddamn product. I'm going to teach myself. Okay, fine. I mean, take a screenshot of this, practice this. This is ridiculous how many different reasons there were here. So 1.618, that is a trade location reason. 50% retrace of the entire 2023 rally. So that is this entire move from down here all the way to up here, 50%. In fact, this is Colin's pump chaser zone. And if you're a fan of Colin, then you know exactly that, once we get into this window, he's going to start getting laser beam interested in the market. Trend channel support. So we have this channel here, and we were dipping down here. We didn't actually hit the trend channel bottom. But again, getting into that window, got to be thinking about trade location. Higher time, or excuse me, this is higher time frame trend line support. I guess that's what that HT is. That's and that was basically this high. Oh, that's it's supposed to be an L, not a T. High to low trend line support. So that's this guy here. Don't even want to get into there. And then of course, probably the biggest reason possible. In fact, actually, you know what? We don't even have this on here. We could say 6, but you know what? Why don't we, we'll take trend channel support out and we will put in candle body lows for trade location. Because I think that was like the primary reason why this thing stopped right there. Because keep in mind, Mr. Fink goes on CNBC and says, buy, 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 buy. So he does not want to look like a fool. He's more than happy to see this. And anybody who says, hey, were you on CNBC? And he goes, yeah, look at what price did following my presentation. So obviously I'm a smarty pants. So there's no way in hell he's going to want to see price lower than that. I wouldn't even be surprised if people said, well, I've missed the trade. This is where Fink barked about Bitcoin. So I'm just going to put my order in at that level. I want to be long from where he's long. Um, so, I mean, we got a hell of a lot of trade location reasons in here, a lot. So I think you could say at this point, yeah, we got trade location. Then the second criteria, as I quizzed all you earlier, is hey, once we come into trade location, what you really want to see is you look down at your indicators and you see a whole bunch of confirmations. And ideally, we want to see that concept called divergence. And remember, I even showed you. I mean, I'm sure there's probably a lot of people that watch these videos and go, oh, this guy's just making this shit up as he goes. And I can completely understand that because sometimes when you listen to people on YouTube and social media and shit like that, talking about trades and all that, they use the craziest terms. And I hear people like literally using the exact opposite term to describe something as the textbooks. And that's understandable because there is no technical analysis police out there. But I even showed you earlier, and do yourself a favor. I'll even just make it easy for you. Remember, this was given out for free, compliments of, right? So I don't think I'm breaking any copyrights by sharing this. I don't know whether that link actually shows in the chat there, but that's to this document. Like we've got the link in the library. And again, learn from the horse's mouth, right? These guys are definitely the source. And as I showed you earlier, they actually go into great detail about, oh, darn it, how divergence is identified. Oh, look at that. Look at that beautiful chart. Oh my God, so pretty. So nice little, I think that's the stochastic one that they did, right? Stochastic, right? And then look at this RSI. Oh my God, so beautiful. Look at that. Oh, beautiful divergence. Oh, beautiful divergence. So do yourself a favor and learn this concept. It's incredibly powerful. All right, so anyway, back to our story. So ideally, reason number 2 is you want to see that the indicators are, yeah, exactly, Cole. Drive you crazy. You want to see that the indicators are actually saying that, price is actually a lot stronger than you think it is, or price is a lot weaker than you think it is. So you tell me. And this is John's script. This is so handy. This is almost as kind of like cheating, to be honest with you. Like new people like Zero Max, you're new to the site. I don't want you to just load up this guy's indicator and say, I'm just going to use this and not learn this concept. I need you to learn this concept. And then that way, if you do use these indicators, you can kind of go, okay, I understand what's going on here. But if you pull up the charting tools, you see that on this dump down into that 1.618 that made a new low in price, these indicators did not make new lows. And that's the basis of divergence. So do we have indicator confirmation at this level? I think so. So we've got trade location. We've got indicator confirmation. Now the question ultimately is, do we have price structure? This is where I think we run into problems. Is I don't really have any price structure to work with here yet. Which means I can't really get overly bullish here. Now, I'll tell you, if they could somehow, and it would be awfully nice of them, put in a nice W down here, something like that, that would make me uber excited. Ideally, because of this existing downtrend line, I really actually want to see this play out over time. And actually, I'd like to really ultimately see this thing put in the W on the other side of this downtrend line. So because of that, I like the trade location. I like the indicator confirmation, but I just don't have any price structure to get uber bullish about. So to me, there is no trade on the daily time frame. It kind of sucks. What do I think is going on here? and this actually, I think, is where we go back to the weekly price chart. Hopefully everybody got a really, really good lesson there 2 or 3 weeks ago on how moving averages can just stop price in its tracks. So, we started this particular week, we rallied up. Everybody was like uber bullish. This is the moon. We're going straight up. It's new highs. And then we ran into all three of these moving averages, and the price just got bitch slapped straight back down. I don't know whether we're going to get a bitch slap. I think the poor little bitch has already been slapped too hard here. And if anything, the bitch gets slapped, and keep in mind, it could be a female bitch, could be a male bitch, could be a houseplant bitch. And just because you say bitch doesn't mean it's one sex or the other. And frankly speaking, I'm not sure what Bitcoin is. Is Bitcoin a he, she, or an it? I don't know. But anyway, that's just Brian being facetious. So you can see we got all three of these moving averages. They're actually tighter than where they were when we were initially rejected that week or two ago. I guess 3 weeks ago. So I don't see any reason why they wouldn't be now. And of course, we have this downtrend, and the downtrend line is actually steeper than this. I had projected this as an interesting time study. If they always say that the market, the universe, not just the market, the universe is a fractal. And the easiest way for you to think of this is if you look at a maple leaf, not some crappy, stupid shill, but you notice that this maple leaf is technically a fractal. This left part of the maple leaf looks identical to the right part of the maple leaf. They're just exactly backwards. So the point being that if the universe does operate this way, can you see how we might just have the left part of the maple leaf, this fractal up top here, and then the right part of the maple leaf? And interestingly enough, you can kind of see the maple leaf just in this particular part of the price action right here. So this might be like the maple leaf within the maple leaf, right? And this fractal right up top here, we call a head and shoulders pattern. Right, left shoulder, head, right shoulder, fail. And then you also notice that, well, I mean, you could argue this could be a shoulder. So we come down, dip down, play, wicks and tails like to be eaten, tail bottoms, trap bears want release. Get some sort of stab down into this area, then counter trend rally back up into these highs, then roll over, come back down against these lows. And it just makes one big ass fractal. And I might argue that this trading range that we're in here right now is in essence almost like this little part of the top of the maple leaf. That's what I think is going on here, folks. So we're kind of like right here. We had a V bottom, and we all know, you all wrote this out earlier, V bottoms at some point down the road will have to be tested. We put in a V bottom, and all the indicators were saying that, hey, the market is a little bit too oversold here. It probably is due for a bounce. So that's what this rally is that we're probably going to see over the next month or so, is just this part of the entire top of the maple leaf. And we go back to our image again. There is that weekly chart, and this is what I think we're going through on the weekly basis. And as you can kind of see from this side of the maple leaf, this was not a straight line, right? We actually went, and it's pretty violent too, right? So we went down. Actually, let's make this a brighter color so you can see it. Where's the drawing thing? It's on here somewhere. That's weird. Where is it? Where is it? I can't see it. Oh, there it is. There. It's small. What's going on here? All right. Well, oh, there it is. Okay. So let's go like that so you can see it. Now let's maybe make this nice and fat. Okay. So we'll get rid of that and try again. Oops. All right. So think backwards, right? So Huge one-way move. That was Mr. Fink's fuck you, right? In 1 week, he took the whole summer rally away from us, the bastard. But notice, right? Up, down, up, down, and then up, and then down, and then up. So, you can kind of see what our move into the next shoulder is going to look like. There's going to be a ton of back and forth here. So you might argue, just like we were going through this mess, that we had a down, then a big up, and then a new low. And then I wouldn't be surprised if it has to look something like that as we work our way up, maybe a little bit tighter because there's the high there. So, don't get like thinking that, all right, this is straight line up, away we go. This is probably going to be a lot of back and forth in here. That would not surprise me. And the reason why I don't think that this is like really the best quote unquote buy signal is you can see we got all three moving averages on the weekly chart all staring us in the face right in front of us. If we go to the daily chart, this is kind of cool because, I'm a big fan of moving average crosses. So you can see once we got a moving average cross here, the fast crosses the medium term moving average. Yeah, it opened up a pretty big rally window. Then we got a fast cross the slow on the bear side, and that sort of set up this slide here. But notice we've actually crossed back bullish here again. So that's a good sign. But there's that 200 period moving average on the daily charts. Interesting how the 200 period moving average lines up with the downtrend line. This is based off of market structure, so it's a valid trend line. Which also, oh, what a surprise, that Beamish guy's always going on about candle body highs and lows or trade location. So if you actually take that clothesline level right there, that's 2772, what did I say? 27,726 bucks right there. Look how that perfectly aligns with the 200 SMA and perfectly aligns with that downtrend line. So I'm starting to see a lot of reasons. And again, we go back to the weekly chart. That's what this level is, right? 200 SMA. And this is the weekly SMA. So insanely strong number. That is at 27,770. Jesus, that's pretty close. What's this number? 27,718. So the difference between the 200 SMA on the daily charts and the 200 SMA on the weekly charts is like 50 bucks. I would say there is an absolute brick wall of resistance right in this window. Now, quite often what ends up happening in trading is the market will spike into that level. And then, of course, all the noobs, they all come and buy this because they think, all right, this is broken. It's new highs and we're all going to get rich. And that 9 times out of 10 is a trap. So our rule is that we have to let the trend line be traded to, and then we have to see market structure that actually sets up the bull here. So I could see this thing rally up top here, but what I'm worried about, and hopefully you can start seeing this, is what kind of pattern would this kind of make? And I'll make it really easy for you, is if we go down, and then back up, and then down, made a new low, then back up right into our trend line and into our moving average and into previous market structure fail levels, somewhere up in that area. Oh, what a surprise, right into an FOMC meeting. And then we had a pullback, and you don't know how deep this pullback's going to be. And I wouldn't, if anything, I would expect that we probably are going to pull back into these moving averages. The key here is if this inverted head and shoulders is for real, we do not go through this low here. So that low there is 25,350. And frankly speaking, I don't think we're going to go through there until next year. So 25,350 is all the way down into that area, and then head back up. And now what does that kind of look like? Hopefully you'll say, well, that looks like a head and shoulders, right? An inverted head and shoulders. And keep in mind that this inverted head and shoulders, the right shoulder sometimes actually is very shallow. The key here, though, remember we've got this downtrend line that we're working with. The key is, can we get the move up into the neckline? Then can we get that bullish structure on the other side of the trend line to set up the trade? So that's what I think is happening here. Does that make sense? Somebody over on YouTube, if you could just, or even in the, we don't have too many people here. But did I explain that clearly, what I think's going on here? Or did I just confuse the hell out of you? I hope I didn't confuse you. I can't really think of a buy signal here. Actually, let me just wait. Eddie says clear. Good. How about you people over on YouTube? Before I go forward, do you understand the logic of what I just did here? Luke says it was a great explanation. Oh, that's good. Hit the like button. Actually, interesting. We got 35 people watching and 36 likes. How does that work? So I guess some people, I guess they tune in and they go, oh, this idiot's talking. Oh, fuck, I don't want to listen to him. I don't know. Anyway, so as I had said there before, I mean, this was an incredible trade location. But you had to have balls of steel to step in on that level. And frankly speaking, all new people to trading, I do not expect that of you. Like Mr. Zero Max, I do not expect you to be hunting that as a trade. That's like Eddie class. He's been around a while. Chris maybe might be there. I don't know whether he's there or not. But this is definitely super duper advanced. And really, you'd want to be buying this candle body level and then seeing if you got any sort of bearish structure on the fail of these lows, and it never did fail through there, and so you'd be long off the lows. But that's an extremely difficult trade, and I don't expect new people to trade that. I do like the idea that you let the market come into this level, and if anything, as I had pointed out there, I would prefer that you just let the market breathe and just let this fill out. And you might find, and this is what I'm a little bit worried about, this is painting the bull scenario. But I wouldn't be surprised, and I know it sucks, right? Because you get these huge sort of V bottom rallies. They're violent, but then you spend the next 2 or 3 months just taking it all back. And so, if this turns out to be a V bottom and these jerks just take this thing straight up here, I can't endorse you buying that. If anything, what they're doing is they're setting up a new sell signal. Oh boy. 2. It's 2 lucky? Usually 3's lucky. Anyway. Now, is there something else going on here that maybe is the reason why this is happening? All right, Eddie says bottom for this year should come in over the next 2 or 3 weeks. I mean, it's great to make these predictions. What I have found in this crazy world is it's dangerous to get into the business of predicting what's going to happen. If anything, I like my approach to technical analysis in the market is try and identify levels that are good trade location. Then as the market comes into those, identify things like divergence. And then if you actually do have price structure that can validate, justify the trade, then take the trade. And, what I teach everybody at TRI is the moment that you enter a trade, and actually this rune's a really good example. On Wednesday, we had a show with Coinigy, and we talked a bit about this. This is the example that we have in the newsletter today. I thought this was it's such a perfect example of what it is that we do as technicians in the marketplace. Because oh darn, this isn't linkable, eh? Can we make that linkable, Chris? Hopefully he's still around. I don't know whether he is or not. This is not linkable. Like usually we have this like links to that tweet. So maybe you can just make it this linkable. Thanks, man. Oh, no. We're all working together to make a better, positive difference in this world, right? I think that's how the message goes. So thank you for your assistance. Maybe I need to show you this on Twitter though to get a clear image here. What time is it? Are you guys enjoying this today? Is anybody getting any value out of all this? I do see that the number of viewers are dropping off here. Yeah. All right, so on the Coinigy show, I had highlighted this. This is a setup that actually I teach people to trade in the level 1 program. Zero max coming out of this. You should have a pretty good idea of what this setup is and how to trade it. Trend continuation. So I've identified the levels. In this particular case, we don't really have indicator confirmation on here, but the indicators were all starting to point back up. And this is what's called a AB equals CD. It's sort of the trade setup is a bastardization of this ABCD, where we're just going to break the formation into quarters. I'm going to risk this quarter, and I'm going to look to take these 3 quarters from the market, or basically a 3-to-1 risk reward ratio. So really good example where, frankly speaking, I don't know what the fuck's going to happen here. Nobody does. I mean, it's impossible to predict the future. But at the same time, too, I know statistically if I have 3 higher lows to work with and I get market structure that develops basically off the 25 level on the other side of a prevailing downtrend line, the statistical odds of this thing working in my favor are very, very high. And that's the name of the game here, folks. So that's why we included this image in the newsletter this week, because this is, as it sounds kind of boring and it sounds kind of mundane, but really, if you fancy yourself a trader in this world, and you don't have to be, there are a lot of people that are just investors. They don't fancy themselves traders, but if you fancy yourself a trader, then by definition, what you really are is a statistician. You are basically playing the statistics. And I know, because I've done this trade at least 537,296,472 times, that just like our 1.618, if I see this pattern play out, well, what do you think's going to happen? Is the price of the asset going to move up? And the interesting thing is, look, the price of the asset's moving up. And we're moving on up, moving on up to the east side, moving on up. So I guess the question I would have for you guys, actually, this is interesting because I think actually we originally did it off of that low there to there is there to there. We could probably also do it off of this bigger one, but you tell me. And based on that image, hopefully you all copied it, put it in your journal. Hopefully you all have a copy of the newsletter. You're all subscribers, so you'll get it in your email. But you tell me. I mean, what should, if I had basically done what I said I was going to do from that image, right? And our downtrend line breaking was right there. So there is the bot entry level, and I think this one's a bit sloppy. The Coinigy chart is a little bit more crisp. Yeah, that says 9. Should be 3. So who can tell me what should I be doing now? Now that this, and just, you know what? I'm not even going to stress you guys over it. You all have the newsletter. You all saw exactly what it is. You should all have it in your journals. Now that this level has been hit, what should happen here? Let's see if any of you can answer this. And I would expect all you TRI vets to be able to say this in your sleep. But what should happen here? Thank you, Gog. So if I bought the 25 level, the W, front running the trade, whatever you want to call it. This happens to be Rune versus Tethers on Binance. I don't know whether you're trading Tethers or not. I think the one that we had in the newsletter was a Coinigy chart, and I don't even know if it was Binance and Tether. Because the problem is us in North America, we're not really supposed to be on Binance anymore, I think. So I think this might actually be a different one. Oh God, that's so blurry. I can't even see what that says. Hmm. I don't know whether that's Brian needs glasses or whether that's just poor picture quality. Anyway, it doesn't matter. You should all be looking at this going, okay, I'm long from 161.8. My stop now is at 161.8. Shouldn't get hurt by this trade now. I can start locking in profits at 202. And that would be sort of things like, one concept that we teach in the education program is the 3 high low method, which sort of, that is the basis of the bot: 1 low, 2 lows, 3 lows. So always have your stop on the third most recent low. So that way, if they go after the recent lows, running out the noobs, you don't have to worry about getting stopped too quickly. But, if we start doing things like this, as we're approaching the ultimate profit objective, and we'll just put that there. So, oh, come on, you. No, that doesn't matter. We move stop to trailing at this point and then go like 1 low, 2 lows. Nope, still got to have my stop at scratch. But 1 low, 2 lows. Hey, we're starting to move up. 3 lows. All right. So 1, 2, 3. I can move my stop here. Let's start locking in profits. And ideally, I'd love to hear that you all have your AOCO, automatically order cancels order, to at least take partial profits at the bot objective right up in there. And if this was a futures trade kind of thing, I would just ring the register, declare victory. Woo, I won, yay. But, I can understand there are some people in the world that are like, Brian, I want to try and juice this for as much profit as possible. And you said that sometimes this thing goes all the way up to 1.618, which is definitely possible. So you could sell maybe like 3/4 of the position here, do the 3 high low method on your stops. And if this thing just goes absolutely insane, let some more go up at the 1.618. And this is a trader's life. This is exactly what I'm trying to teach all of you. So anyway, point of the matter here is this is absolutely textbook. This is everything that we do at TRI, and not a surprise whatsoever to see this thing rocking and rolling. Also nice to see. You can see I'm long from down here. So this was for our little old lady portfolio. So if we do for little old ladies, just keep it simple, stupid, buy against the bottom ends of ranges. I'll be looking to sell half at basically $2.42, which is interesting because that's right in that 2.35 area. So my hunch is this thing spikes up into this area. All the people that bought this original bottom, they're going to be ringing the register, ding, 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 ding. And then the thing's probably going to come back down. So anyway, we'll see what happens. That's sort of getting into predicting the future. I don't even really want you to get into the business of predicting the future. What I just want you to understand is, all right, when you get 3 higher lows and a trend line break and W's on other sides of trend lines, it often sets up fairly high probability trade setups, and this thing's just doing its thing. So in the face of Bitcoin kind of Snoresville, chopping in the range, Fink's fucking around. He's got his ETF. They're securitizing this. I mean, is it likely that Bitcoin's going to double in this window? No, maybe 10, 20% back and forth. But that doesn't mean you can't be hunting setups in these little ones and rocking and rolling. It's never a dull moment. We always say there's always a bull somewhere. So that's why I included this one in the newsletter, just to show you that at any given point in time, there's always something cooking in the market. Now, with this market looking the way that it is right now, I don't want to hear anybody saying that they went and bought that there. That's just stupid. So don't be stupid. All right, please. Thank you very much. Learn from this. Replicate this. Put this image in your diary, in your journal. And, if you need to be taught how to do this, and that's perfectly all right, just like Zero Max, pop on in, join our education program. We don't charge you much for the program, and we can change your life for the better. Okay, so if anything, this was kind of a cool dovetail, as I had sort of said, off of the Bitcoin chart. I think we're in at number one. Be careful here with regard to Bitcoin. This is a dangerous market state when you have the S&Ps not happy, which is basically a proxy on the broader stock market, but crypto is somewhat happy. Just be careful. Don't bet the farm. And just you, hopefully, what you heard from Brian. We've got this SBF nonsense coming ahead of us. I will say something. I guess this week is all about toting other people's videos, but I even tweeted it out. I was really, really impressed with George Gammon, this gentleman, his connection of the FTX debacle and the way that the FTX story played out and the US housing market. I thought that was a really, really cool connection because you can make it's remarkable. And again, I don't know, I'll probably get into copyright shit mentioning this guy. I don't know. We won't play the video, but we'll just show it. You could argue that just like crypto, the way that everybody goes FOMOing into the market, you could make the argument that the US, they're always talking about how tight the US housing market is, but is it really? Just go and watch this video. I think he does an excellent job explaining this because I think that the US housing market is exactly the way that the FTX token got bid up to ridiculous levels on incredibly low volume. There was just a small fraction of the total number of units in the marketplace that were actually trading that caused FTX to go up to the price that it did. And then because FTX and FTT or whatever the fucking name is, and the little what's it called, Alameda Capital and all that, because they own so many of these FTX tokens or FTT tokens or whatever the hell it was, all of a sudden, on their books, they look like they're richer than stink, but it's all concentrated in one asset. I see exactly the same thing happening in the US housing market, where, yes, the price of the US housing, and George does a really good example, where really this bottom line here, this is the inflation rate. And the inflation rate should basically follow along sort of what the working slaves of our society, what they make on a regular basis. And when prices of houses get too disconnected with what the slaves are actually being allowed to take home from their 9-to-job punching clocks worlds, this is not long lasting. At some point, the price of this asset will have to come back down to earth. And I think exactly the same scenario is going to happen here. And it's interesting how he plays connect the dots with this silly Airbnb nonsense that's happened in our society. And people are kind of poo-pooing the significance of this Airbnb. But, he even points out repeatedly, there's tons and tons of anecdotes. Like, there's 39,000 fucking Airbnbs just in New York City. And then he's like, well, let's go out and look in like middle America. How about, and I think this is like Nashville, Tennessee or something like this. Austin, Texas. 14,500 Airbnbs. Because it's ridiculous what's happened here. So it's exactly the same thing as, if there's any sort of push that, we're going to encourage people to not go into the Airbnb business. And George basically points out that a whole bunch of people are going, like, especially in New York City, all the socialists that are running the government are like, hey, working class can't afford housing. What's the Achilles heel to all of this? Why is this? Oh, it's this stupid Airbnb shit. Everybody's buying Airbnbs and then renting them out, and that's how they're affording their mortgage. I know. Let's either outlaw Airbnbs, which is what the Americans are slowly doing state by state by state by state, or like in Canada, typical socialist fuckheads, they're actually going to tax the shit out of Airbnbs. So like the annual fee to do an Airbnb in Vancouver here was like $150, like just an admin fee. They're going to literally 10x that this year. And it will be that slow erosion that will literally people, and watch George's video. He said people are sort of like, look at, with the Airbnb, I can just barely afford to make the mortgage with these insane mortgage rate increases. I'm just teetering on the edge. But if governments all of a sudden come along and say, can't do Airbnbs here anymore, sorry, it's against the law because of what you've done to the housing price, or in Canada, they're not going to outlaw it, they're just going to tax the fuck out of you because that's typical Canada. This could actually turn into a tsunami going the other direction, where you have an absolute flood of supply overwhelming the market. And as I said, what's supposed to happen over time is this housing price should work its way back to CPI. So you can see the disaster that's potentially looming in the housing market. And this is exactly the same thing that happened with that FTX. It's identical. And are there a couple maybe Wall Street firms that happen to own big blocks of these Airbnbs that they're not going to sell just 1 or 2 units when they can't make the mortgage payments, or the local governments outlaw Airbnbs, or the taxes go through the roof that it's just not profitable? Do they start selling maybe 1,000 units at a time and just absolutely flood the market? It's exactly what happened with FTT. Exactly what happened with that whole SBF fiasco. It's identical. So I thought that was, hats off to George. I thought that was actually a very, very good connection. So do yourselves a favor and just go watch George's summary here. I thought it was spot on. And of course, Brian is been sort of talking about the US, these housing prices are unsustainable. The whole damn thing's going to crap out. But just remember always, people, Brian's usually right, but Brian's usually early. And as George pointed out, it took about 4 years to go from the peak to the ultimate trough in housing prices. It might take that. And we have one gentleman, in fact, I think he's over on YouTube right now, who has been telling us repeatedly over the past few years that 2027, 2028 are going to be an absolute nightmare. And oh, what a surprise, 2023 plus 4, 2027. So this stuff like writes itself. It's incredible. So just understand that's the backdrop that's going on here. Yeah, it's gonna be crazy. Okay, I'm not quite sure how I got off on that tangent, but point here is I think hopefully I don't know, maybe you're getting some value out of this, maybe not. Okay, we got about 40 minutes to go here. Over the short term, as we had sort of said, off of the newsletter, we have a bit of a mixed message in the market right now. And if anything, we could probably see that if we get any kind of selling out of the gate Monday, we're probably going to see the breadth roll over. But, given what you saw out of that rune, it does make sense why the crypto market is trying to push higher here. Yes, it is pointed bullishly, but at the same time, too, the Bitcoin price action itself, I still think Bitcoin is very much trapped in a trading range. And the trading range probably has a high of, say, 27, 28,000, somewhere in that area here in the near term. Maybe they even take the market out into the end of the year, into those levels. And the bottom end of the range, I think, is actually what we just saw. And the easy way for you to reference that is candle body highs and candle body lows for trade location. So as you can see here, candle body highs into these wicks and tails like to be eaten. Notice that just so happens to be Brian's favorite fib, the 78.6, and the reload short zone. Oh, what a surprise. And of course, if this is some big maple leaf fractal, the market should probably, if this is still a fractal, is we probably, try and talk and chew gum at the same time. It's almost impossible. This high here is, wow, that high is 31,000. I don't know whether we can get all the way up to 31,000, but clothesline level, wow, that's even 30,000. Oh, isn't that remarkable? So we could work our way, in some great orgy peak, and what is this? This would be very interesting, middle of October. Maybe this is kind of a scenario where the Fed doesn't raise rates here. Like what I've been sort of thinking here is we've got this FOMC event coming up here. And actually, no, that's the next one. The next FOMC event is this one right here. Whoops. And I'm wondering whether this is by the rumor. Jeez, can't even get that now. By the rumor, and then following the FOMC event, sell the news, because that's usually how this stuff goes. And actually, it wouldn't surprise me if it's sort of like buy the rumor, then sell the news, then we stabilize, then buy the rumor, and then that is your ultimate top. Although we probably don't see this high taken out here. That would be my hunch, something like that. So we do have an FOMC event coming up here next week. If you are interested and you kind of enjoy these broadcasts on FOMC day, we do have like an hour or two long broadcast that we do through the FOMC event that talks a little bit about, what Powell's actually saying, whether there's, whether the news reporters like him or not, all that kind of fun stuff. And also too, I think, gee whiz, I can't get this darn thing. Also too, I think there's some great learning to be done through FOMC events, and then, don't trust the first hour through the trade, because almost 9 times out of 10, it's a trap. There we go. Finally got it to work. So be interesting how when we did this fractal right off of this top, interesting how this rally peak you can see here was right into that FOMC event. So I kind of get the feeling that that's what they're doing here in the short term, is they're probably going to rally the market into that FOMC. I don't know how high we go here. My hunch is moving average trend line, kind of what I said there a few minutes ago, right? We might get a break above that trend line, but that's not a buy signal. And you notice that, oh boy, we just work our way back down. And if there was going to be a buy signal, it'll be that W right there, which is interesting because that'll basically be the same level. So anyway, point of the matter here is we got FOMC coming up ahead of us. And I wouldn't be surprised if there's a push into that event, because they really do like to rally the market into FOMC of late. And keep in mind, that's kind of a bad sign, right? You don't really want to see the market rally into FOMC. If anything, you would prefer that the market sell off into the FOMC. That's more, I guess, a stock market commentary than Bitcoin. Having said that, I do kind of like this scenario here. The bull's got the ball for the time being. It's incumbent on the bull to actually relinquish control. If we go down to that 4-hour chart, I think that the bull is pointing up, but kind of like what we showed off the daily charts when we got down into this level. And notice we are starting to build some bearish divergences. That's not good. Here is the FOMC event. I'm still leaning towards them taking this market higher. There is that market structure trend line I talked about, off the higher time frames. There is these candle body low, in this case, candle body highs that I like for trade location. And notice, if this is a midpoint consolidation, then I like the idea that this creates an EB equals CD. The question is, which way does this break? If we get, this just made a new high, and the algo, of course, is pointing bullish now, so I am leaning up. If this thing goes and puts in 3 lower highs, then, of course, we have to start thinking down, and we have to start thinking these targets down here. And we'll adjust this target with whatever this ultimate high is. On the other side, though, if we put in 3 higher lows. Now, this was a new high right there. So we're going to have to see 3 higher lows following that. So we have 1 low. If we put in 2 lows and then 3 lows, well, then we can start thinking bullish bot taking us up top. And that rune chart, I just walked you through what those bullish bots look like. So right now, off of the lower time frame, and this is about as low as I want to go with you guys. I'm thinking we had one hell of a higher time frame trade location, higher time frame confluence of levels down here. Dead cat bounce right back into resistance, blew through these highs, quick consolidation which to me is setting up this A, B, C, D to take us higher. I just have to see 3 higher lows for me to be able to frame a risk here. As we see here, just a few hours ago, we did put in a lower low, so I have to start my count off of that low there. And, if we see 3 higher lows here, and this does set up a bullish pot, you might just hear that Brian's taken a lower time frame long heading into that FOMC event. That wouldn't surprise me, and there is the FOMC there. So hopefully that gives you an idea what I'm expecting out of Bitcoin. If this bullish pattern does play out, then my hunch is things like this rune are just going to be rocking and rolling. And this is where the big money, if there's going to be big money, this is where the big money is going to be made on these kind of crypto rallies right now. Okay. Got about, what's that, about 20 minutes? Oh, I guess a half an hour. Not bad. Why don't we finish off the broadcast here? Of course, you all know. 1 p.m. my time here. I am off to Liam. So if anything, think some positive thoughts, karmic best wishes for Liam and I this afternoon, as that is where my attention will be focused when I'm done with you guys here in about a half an hour. Have a half an hour to work with. So I don't know whether there's too many questions. There might not be any. We did just start a brand new school term. So congratulations to everybody who's in the program. Hopefully you all got to know your instructor, level 1 instructor, Grim, well today. I think if there was going to be anybody at TRI to teach a level 1 program, couldn't think of a better person than Grim. He's very down to earth. He's very level-headed. He's a computer programmer by nature, or by profession, I guess. So the sort of if then else algorithmic thinking is absolutely perfect when it comes to trading. That's sort of like your 3 reasons for a trade. If this and that, pull the trigger. Else, do nothing. So, and ironically enough, that's actually why computers have do well in this algorithmic trading world, because they can follow the if this and that act, else do nothing. Whereas as humans, we're always undermining ourselves. We always go, oh, and actually, let's see if you guys over on YouTube can finish this statement. Oh, no. But this time it's what? And those are like the absolute worst words you ever want to hear anybody ever say in the marketplace. Literally, the moment that you hear somebody say that, then you know that actually this is exactly like every other time. Because every goddamn top of the bull market, there is always some glass node idiot going, oh no, but this time it's different. Thank you, Nore. You're the only one who got it. Eddie's saying sleep. I should go to sleep. Like Biden. Yeah, man, that Biden guy. Oh, God. And, the sad thing is when Trump was in power, I'd be like, oh, this guy, why is he such an asshole? He's such a dick, Let's get somebody who's a little bit nicer in office. And then you get the Democrats come in, and they're so fucking corrupt. And they're like, their corruption is like sugar coated. You know that they're corrupt. You know that they're stealing money. You know that they're funneling. You know that they're working for the banksters, and they do it with a smile on their face. So who do you actually end up hating more? Yeah, like dog money, Cole. Perfect example. Yeah. All right. You're referring to the bot setup on Ruin. All right, fair enough. So please don't infer that I am left leaning or right leaning. For anybody watching this video, it's really simple. How do you tell when any politician is lying to you? Any of them. I don't care if they're on the left. I don't care if they're on the right. It doesn't make a fucking difference in this world. How can you tell when a politician is lying to you? And it's terrible. It is such a bad commentary on our stupid human society. uh, uh, cool. Thank you, Cheryl. My apologies, I just swore. I'm sure your son's probably used to it now. God, I got to somehow figure out how to not swear when I talk to all you people. Maybe that's why we only have 40 viewers. Brian just can't figure out how to stop swearing. Anyway. Okay. What do we have to expect coming up here? We've got FOMC. So be aware of that. We have mixed messages in the market. And, please, everybody understand September historically is a horrible month. You're a New Yorker. Okay. That's good. Hey, okay, yeah. September historically is the worst performing month in the stock market. So if we happen to see that the market, including crypto, doesn't really do much here through the month of September, or maybe we have some sort of ugly, horrible October, don't be surprised. Thank you, Andrew. Just don't be surprised. It's not anything out of the ordinary. But ironically enough, if we do get a meltdown in September, October, you as professionals in the marketplace, and I thought this was a really good example, was what asset was that we were looking at? Well, Chris, do you remember what asset I said? Oh, you know what? Oh yeah, it was the S&P 500. Can you understand looking at this image? And, Cheryl, I think you'd be a good example of this. This was a pretty dramatic drop, right? This is a 4-hour chart. In 4 hours, in 8 hours, the market was way up here, 45.60. They brought it all the way down to 4,500, or basically what? Knocked, what's that, 1.5% off the market? It's not really much. But you as professionals, do you get sucked up in the emotion of this kind of move? Is that what professionals do? Or, no, it isn't what professionals do. Or, as this caption says here, do you actually look at it like, you know what these sons of bitches are doing? They're just backing it up into a buying window. And that is what you have to learn. And, let's use history as a guide. Did they do the same thing through that whole sickness? And it turns out that actually the sickness was just bullshit, that it was just a way to pad the pharmaceutical companies' profits. Did you see? What's sickening about these pharmaceutical companies is they get these huge government grants to do things like vaccines, like to the tune of hundreds of millions of dollars. And yet Moderna did they give any of that back? No. They just reported $400 million in profits, and the goddamn stock went through the roof, and anybody who owned the stock made a fortune. But do you see, this was the sickness market right here. This was everybody freaking out, and some stupid fucking idiot, and I hate when these stupid humans do it, right here, some stupid human comes out and goes, I will sacrifice my life to save capitalism. Look at it. Don't start talking about fucking God's gift to you of life and juxtapose it with capitalism. Because keep in mind, the capitalists are that Larry Fink guy who actually gets you to act emotionally because he wants you to sell because he's buying. It's horrible. So this was a really, really good example of the public freaking out on the sell side, but you have to program yourself that when others are crying, what do you have to be doing? When others are crying, you have to be doing what? Thank you, Cheryl. And it's good that you understand this. Most people in the public never get this. and nobody, all 40 viewers. Why can't we? Is there an intentional plot here, conspiracy? This Beamish guy's giving away all the secrets of the stock market. We better keep this son of a bitch under wraps. I mean, I've been doing this for 10 years. It can't be just my swearing. Or maybe it's just that the public doesn't like to hear this message because I make fun of the public like stupid idiots coming in and panic buying in this kind of environment. And did we just have that? God damn it. We just had this here. And one of the guys that I was teaching that I thought actually had a goddamn brain in his head actually publicly came out because he was part of this shill group that made like $1 billion off of all the stupid public coming in and panic buying and buying his newsletter and all that. And he said, don't be bothered by technical analysis and technical indicators and things like divergence. Just buy my newsletter and you'll get rich. And I was so embarrassed when I saw that. Because, like, what was the whole point in him coming to me? Spirit wanted me to make a positive difference in this world. And this one guy could have influenced the world. And he basically disregarded all of my teachings. And he got the public to come in and FOMO buy through here. And you see what happened following. Was that a good idea? No. Do you think that they just did the same thing through here? And the answer is yes. When I went on social media, and keep in mind, there's massive divergent messages in here. We put out lots of tweets and stuff saying, when the market goes into bear divergence, you got to cool your jets. Just leave this shit alone and let it clean itself up. And yet, you go on social media and all the kids are ranting about how goddamn the thing's going to the roof. And you're just going to get rich and you better buy, you better buy, you better buy. So, I mean, nothing ever changes. But all you 40 of you, and look at that, I'm even losing viewers as we speak. But all 40 of you, I hope you are getting this message. So, September is usually a bit of a challenging month. Everybody understand that, okay? We've got the FOMC coming up next week, and usually the market likes to rally into FOMC events. Buy the rumor, sell the news, which isn't a good sign. And then the only thing I will add to this, because it's sort of kind of on the top of my mind, is that this FTX thing, there's going to be a big trial here. I think that they're going to try and liquidate as many of the assets and try and get that number about how bad the fraudulent losses were down as low as possible. And if the 1% can fuck around with the market to try and help them out, because this guy went and basically sucked the 1%'s penises and clitorises, I guess, if we want to be, what's the sexual organ of a houseplant? Anyway, you get the idea of Brian being crude again. But he played the game and he bought a lot of politicians. And I wouldn't be surprised if a lot of those politicians were just like, stamen, thank you, Fuzzy, suck their stamens. And they probably said, look, just play it cool. And of course, he couldn't keep his mouth shut, stupid idiot. So they threw him back in the slammer. But they probably said, look, just play it cool. Don't do anything stupid. And we will fix this situation over the next year or two for you. But of course, he couldn't keep his mouth shut. How ironic. Anyway, so FTX is still looming over us. And I wouldn't even be surprised that trial is actually when we start, and all of the ugliness of crypto. Because keep in mind, you should hear a lot of ugliness. All the ugly of crypto is going to come out through that trial. And so my hunch is that through that trial, that's actually when crypto makes its ultimate bottom. All right. Hopefully I just talk to this. I think this is a great document. Totally awesome. And, for all you crypto kids, you want to keep this really simple? Sixes are just killer buys. And do we have any sixes in our crypto universe, in our breadth indicator? Weekly Commodity Trend Survey. This is the platform that our subscribers, our dashboard subscribers see. I'm not going to show you that too much. I'll just show you. In fact, all of these screens are part of our advanced subscription package. But I've told you repeatedly, sixes are buys, ones are outright sells, everything else is meh. And fives are like, okay, that's not a bad location, but do we have momentum? Not yet. So you can see there aren't any sixes on the crypto universe right now. Hell, I don't even think there's any sixes even in the broader market. Do we have any buy signals? Look at that. The entire stock market, September is shitty. And you can see we don't have a single buy signal across the entire investment spectrum from a weekly commodity trend survey perspective, i.e., this is actually an investable asset. Now, you all remember, you guys that were watching this, and I remember I distinctly pointed it out. Last November, December, we had a bunch of sixes in crypto. I remember Litecoin put in beautiful bottom and rallied into its halving event window. Hell, you can even see Bitcoin right now is a 3. That's not really a buy, and if anything, that's almost borderline on, hey, we maybe even want to start hunting shorts here. And frankly speaking, if Bitcoin does get back up top here into this topping window, I actually really don't have a problem with hunting a short there. I think that's actually not a bad idea whatsoever. So the weekly commodity trend survey, this is part of our subscription package. It's not saying that anything is actually an outright buy here, and I would have to agree with it. I don't really like a hell of a lot. If anything, what I'm doing right now is I want to wait for the dump. I mean, keep in mind, something like a Rune, I could invest down here, but I can't invest here. Is this a trade? Okay, but that's not investment grade. Weekly commodity trend survey clearly highlights what is an investable asset right now. I hope you guys understand that. So with that said, off of this newsletter, it's another thing that's on the newsletter, so I wanted to speak to it. Right now, don't have any buys, none whatsoever. And if you look at crypto itself, a few sixes, there are some cheap assets, a few fives, but very few buy signals. In fact, no buy signals at all. Okay. Oh boy, that was a mouthful. How much time I got left? 15 minutes. All right, let's pop on over. I don't know whether there's any questions here today or not, but if I don't have enough time to answer all the questions, then what we do is on Mondays, we do it as a spillover into the after party. On Mondays, I'll do follow up if there's any questions that I didn't get to. We can put George away. Let's see what we got here. And oh, by the way, Monday to Friday, when I do the daily briefs, I basically go through my daily routine. I am actually running a combine right now at my old prop firm, just to prove to the audience that I can still prop trade. I've taken one trade so far since I got this thing up and running, and I'm down a whopping 21 ticks. Woohoo! Way to go, Brian. Anyway, we'll see how it goes. If anything, I'm an open book. If I suck horsecocks, it will show that I suck horsecocks and can't trade. Point here is that I'm perfectly fine just following all of my plans, doing everything that I said I was going to do, and proof of the pudding's in the eating. So if you want to tune in and see how sort of a day trader's life goes to Monday to Friday, we do the daily brief after party where we talk in detail about this kind of stuff. I think on the free shows Monday to Friday as well. Actually, I don't do a show on Thursdays. That's Julian's day. But all the other days, I think I show you this on the free show as well, a little bit, not too much. But anyway. Okay, we do have a Q&A document. The question is, where the hell is it? I know Chris sent it to me again, so we'll just reload it here. Nope, that's the newsletter, so that's not it. Maybe that's what I clicked on before. AMA, there we go. Are there any questions here today? I have no idea. The level oneers just finished their introduction, so I would imagine they probably don't have too many questions, but might be 2 or 3ers. Nope, nobody. All right, cool. Great, I get the day off. Yay! So that makes that simple. Just an FYI too, like zero max. This is where I want you to post questions if you have them for me. And anybody else who just recently joined the education program. And everybody is in two. I'm actually teaching the level 3 program this term. The level 4 class, Zach is just kicking it. Anybody, if you have questions and you're in the education program, or even if you're a site member, this is where you post them. And I don't see anybody posting here. Chris, do you post this in the lounge before the show actually gets going here on Sundays? Yeah, there it is. Okay, so none of you have any excuses. If you have a question, this is where you post them. I guess what we'll do is we'll finish off with a quick boo at YouTube. So if there is time permitting, I do like to scroll through YouTube and just see if there are any questions there. And if not, then hell, we'll wind up a few minutes early today. Okay, MM says, hello, brilliant, Brian. Oh, thank you. And great TRIer team. I wish you a radiant afternoon with Liam. Oh, awesome. Thank you. I love that karmic best wishes. That really helps me out a lot, believe it or not. I absolutely love that. Mutual smiles and sun inside and out. Oh, thank you, MM. What a great comment. All right, lots of let's goes, lots of no sound, Brian. You're a loser. What? No. All right, now we can hear you. All right, that's good. Bump the ideas, BB. Let's foo. All right. Oh, no, not seeing many commercials. You never know how much tail is gonna be eaten. That's right, DMAC. Yeah, that's a very good point. Looks like we're pretty light on the commercials questions. Holy trade location, God says. Hit the like button, subscribe, ring Colleen's bell. Wonder what happened to Colleen. Oh, Colleen's doing okay. The divergence indicator you mentioned really is amazingly helpful. Thanks. Alex just says that. That indicator was written by a TRI, or he's just super incredible coder. I think his name's John. So if anything, I don't know. I'm sure it probably says in here. Mind you, I don't know whether you're allowed to see the actual code, but he calls it, and I'm not quite sure, MAB. I have no idea what that's in reference to. Let's see if his name's in here. Settings, height. I don't even think it's going to show you the code, so I can't even give you his name. It's too bad. I mean, the guy's his name's John. He actually replicated my entire weekly commodity trend survey model over on a WordPress site, and he's like covering the entire stock market. It's quite incredible. Anyway, too bad I can't really show you. Right, all it shows is this. So, John, if you are watching this afterward, I think his name's John. Might not be. Maybe change the name of your indicator to actually your name. Maybe MAB is his initials. I'm not sure. Anyway, you're right. It's a fantastic tool. Really, really good tool. Okay, I gave you guys that thing. Oh, who's this? Wolf Boy, oh boy, says, hello, Brian and Chris. I have a small Fidelity account and interested in building it up slowly with small cap stocks. What's your advice or recommendations? Thank you. What would be my advice and recommendations? Well, first and foremost, build a plan. So, I'll just use my day trading one as a simple example of what that plan should look like. So this is my combine. Every single different plan that you have in the marketplace, you need to have a plan. So like, for instance, in the level 1 program, if you're like managing a bunch of assets, then really this is what your overall financial plan should look like. I mean, you can see, look at, how many every different color is a different plan. So I have some money in the commodities market, some in equities, some in real estate, some in convertible fixed income, some in cash. And I have a nice distributed asset base between cash, fixed income, and speculative risk assets like stocks and commodities and real estate and stuff. And every single plan that I exercise in the marketplace, I got a damn fly flying around my head here. Every single one should have its own unique plan. And what do those plans look like? This happens to be my top step trading plan. And you see, I have a strategic plan part of this. So this is where you point out, why am I doing this in the small cap market? What is it I want to achieve out of this? What's my goal? And frankly speaking, if you want to say, I want to trade small caps to the point where I can buy a Lamborghini with my profits, that's perfectly fine. That's exactly where this goes. I think in your strategic plan, you should also point out, take a real good look in the mirror. Take a good look at yourself. Is it even realistic what you're actually suggesting? If you have 6 kids and you're working at McDonald's and you're just barely covering the rent and the bills, then doing this doesn't make any sense at all. So you really need to look into who you are, where you are in your life, how many dependents you have. Do you actually have what they call disposable income that you can go and risk in the marketplace? And remember, anytime you're participating in the market, you should always risk in the market money that you can actually afford to lose. If you can't afford to lose it because you have to pay rent with it, you have to pay bills, you have to feed the family, then get the fuck out of the market. You have no business being here. Then you have to outline your tactical plan. And just like we walked through with trading Bitcoin and trading crypto, do you have 3 unrelated reasons to justify acting? Right? Those are what are called your setups. But also, too, where are you doing this trading? Is it at it, like you said, you have a Fidelity account? Okay, fine. You want to use Fidelity? Great. Have you identified how much risk you're going to take on each and every single trade? And if you don't know the numbers, the metrics of what type of risk taker you are and where you should be, get in the goddamn education program. It's way too complicated to answer just in one of these 10-minute Q&A sessions. And then finally, if you actually have a setup that you're working with and you've vetted the setup and you have an idea of what the statistical model is and how many trades you're likely to take. And in this plan, this doesn't necessarily mean that this is right. This is rough statistics. And it turns out the first 2 weeks of September, right out of the gate, Monday was the Labor Day was a holiday, so I'm not going to be trading that day. But you can see I don't really have a lot of setups, and there's some days where I'm not actually even allowed to trade given certain times a day. So as you can see, I only actually had 2 setups. One worked, and I was very angry at myself over this setup because I was sick that day and I couldn't take the trade. And it was the most beautiful trade. It was like absolutely textbook, but I couldn't take the trade. So, the point here is that's what you want to run through the statistics of what you figure your setup's going to do. And then that gives you a roadmap of roughly how long it's going to take for you to hit your objectives. And if we are statisticians, then you know roughly how many losing trades you're going to have, how many winning trades. And then, of course, you go to your log and you actually say, am I actually doing what I said I was going to do? Now, you want to do this in the small cap market? Totally fine. You want to do it in the Bitcoin market? Fine. You want to do it in the futures market? Fine. But the point is that every single plan has to look almost identical. And all of these plans all have to fit within your overall financial plan. So that's the short answer as to what I would recommend you do if you want to do what you say you want to do in the small cap market. There's nothing wrong with what you're thinking, but you're going to have to figure out what your setup is. Is it fundamental? Is it technical? Is it quantitative? What are your 3 unrelated reasons? What type of risk taker am I? Can I actually realistically do these trades? I can't answer that for you. That's the whole point of the education program. But is it doable what you're saying you want to do? Absolutely. The number one thing I would say, though, if you're playing the small cap market, is you have to have a friendly Fed. And right now, we do not have a friendly Fed. And so as a result, the small cap market is doing absolutely nothing right now. So it shouldn't surprise you. And, you look at the altcoin market and crypto, it's basically the small cap market. So it's basically the same. It's just not doing much. And why? Because it's waiting for the Fed to actually get friendly again. They always say in the market, don't fight the Fed. And, I might argue that these 4-year halvening cycles are actually just a function of the money cycle. And it works beautifully to help all the crypto kids time when they should participate in the market. Just don't fight the Fed, or only get involved on the long side and quote unquote trading the market for profit following the halvening event. And then when you see prices all go running up and you hear about stories like FTX and this little bimbo of an idiot, to be perfectly frank, I don't think he was really as smart as everybody thinks he is. He just happened to float an asset in a rising market state. And mysteriously, I created this exchange with billions of coins. And now the market's actually giving some value to these coins. So now all of a sudden I'm a billionaire because I'm so fucking smart. Well, not really. All you did was just played the inertia of the market. And what I might say is, this is my advice to each and every one of you. You want to go get fucking stinking rich in crypto, and it's the same thing in the stock market, is go and float a brand new coin. I mean, that's the way that Da Vinci guy got stinking rich is, after the last halvening event, he floated a coin and his community bid the thing up to absolutely ridiculous levels, and he became a billionaire out of it. I mean, same thing with the FTX thing. No difference. And I remember one guy that is a site OG. I won't mention his name, but you all know him. He did a big financing deal with Danny and Magic Internet Money. Same thing. Soon as the market fell in love with Danny, not because Danny's so great, fucking. You don't hear any of that kind of talk anymore. Why? Because the cycle rolled over. Fed said, don't fuck with us. We want to inject some pain in your life. And all of these speculative assets all collapsed. It's the same thing over and over and over. So you want to get rich in this space, like stinking billionaire rich? Get in there, float a new idea. Remember that Luna guy? What the hell was his name? Do Kwon? Stinking rich. The guy's like walking on water. The cycle rolls over. Everything starts heading back down. Boom, instantly bankrupt. I mean, it's almost cliche how this shit works. So I don't know whether you heard that rant, but if anything, man, that was a good rant there. That was perfect. All right, I hope I answered the question. Yes, it's doable, and I showed you what you got to do. So there you go. Merry Christmas. All right. Any other? What time is it here? Oh, it's 1 o'clock. All right. So if anything, probably great that we finish off. Yeah, Luke, are you LUK? Are you a site member? Maybe fire that question into the daily brief request room, and we'll do that in the after party tomorrow. Okay. Quinn, are you part of the site? Says, could you look at a stock? I mean, I can always look at them, but let's do that in the after party as well tomorrow. I did nicely with GRS crypto. Can you go through the trade? How predictable was it? That bull div MAB is a great help. All right. Again, man, Andrew, I know you are a site member. Can you cut and paste that question into the DB request room? That's right over here to all of you that I've told you that. DB request in here. And, so you can see DDBB is already asking me to look at Pearl. So I'll do that tomorrow as well. Okay, so we didn't have any questions from the students. It is 1 o'clock. As I said, it is now time for me to go off and do my real job. So if you could all please and kindly say a nice small prayer for my son. When you guys do that, for some reason, we seem to have a great afternoon. Knock on wood. So if you could all do that, I would love you for it. Quinn, great. You're a site member. Fire that into the daily brief request room. and we'll definitely circle around and answer those questions tomorrow. And Andrew, if you could do the same, love you for it. Hope you guys got some value out of this. Thank you for the best wishes over here. Glass Insights. Thank you, Eddie. Eddie says, you know what the advice is? The advice is take the level 1 program. It's simple as that. You'll learn in glorious spades everything that you asked and how to kill the market if you just take the TRI education program. I'm not a very good shiller, you know that. And if anything, I like those self-motivated people. We had this guy, Great Del Moody. He taught himself how to do this. But then the cocksuckers go and actually start up a competitive website and try and like literally steal all of our client base, which I don't like. I think that is really bad karma. So that kind of bothered me. But hey, if all of you can go and learn how to do this just from the free content that I give you guys on YouTube, then I think that's excellent. But I understand that if I hear that you're going and starting up competitive websites and advisory services and all that because of your learning, I'm not going to like that too much. So just understand that. Okay, have yourselves a great day, everybody. PMA for the win. Slow and steady wins the race. I hope you guys made me proud. Made me proud. Are proud of knowing me, or proud that I actually am trying to make a positive difference in this world. Awesome, awesome. Slow and steady wins the race, and we'll see everybody in the market first thing tomorrow morning. All the best, and bye for now.